All right, zipping through, just kicking off hour two, actually, right here. I'm still in the Corona Bunker Studios in my house in Staten Island, New York. Frankie's at his house. And the guy who's watching over these crazy markets all the time, Chris Markowski, joins us right now. He is the watchdog on Wall Street. Well, he's the host of the Watchdog on Wall Street radio show, also the president of Markowski Investments. Chris, what a day to have you on. The market's down 1,500 and looking like there's going to be more blood let by the end of the day. What's happening here?
Who knows where it's going to be at the end of the day? But, John, we were due. we were due for a sell-off with the type of run-up that we've had over the past month and a half. Getting out a little bit ahead of ourselves. And it really didn't take much today. There was a little bit of news in regards to spike in cases of coronaviruses in a couple places. And it's really not that bad at all. It's something to be expected. Down in Florida, they're testing like crazy. I just got back from Florida, and you can go by a mall, and they have testing centers there. So, yeah, a lot more people are being tested. So, obviously, you're going to have more positives. I do think that the narrative moving forward as we get closer to the election is going to be second wave and trying to scare people again, because the last thing in the world that the left needs right now is the economy to recover and the stock market to recover. That's just too much of a boost for the president.
So there's been a whole bunch of articles, Chris, that while people have been stuck at home, particularly young people, there's been a surge in the hobby of day trading, right? Even the New York Post today said that they think the surge in people being home trading stocks on their computer has been in part what's propelled the stock market. What do you think that means for the short-term nature of the stock market? Are we seeing actually more day trading, or is this more a function of media hype than reality?
Oh, no, there most certainly has been a lot more day trading, in particular in regards to penny stocks. Inexpensive companies out there. Again, Las Vegas and Atlantic City haven't been open. Well, Vegas just opened up. And people going out there and no sports to bet on or anything else. Hey, let's try our hand at this. We've got these companies that are bankrupt that we can move because there's very, very little volume in these things. And a lot of these guys are like spiking the football, thinking that they're the greatest gurus out there. I keep thinking of Quint from Jaws, where he's singing farewell and adieu, because these people, they're going to get their heads ripped off eventually, and it's okay. It's a lesson learned. It's not like that they're investing with a lot of money. It was interesting. There was a really misleading piece. I don't know, it was in CNBC or the Wall Street. I think it was CNBC, talking about how these stocks have gone up by 80% in comparison to some of the tech stocks that have gone up by 5%. Yeah. It doesn't take much to move a penny stock. You need a little bit of money, and the thing's going to move very, very far.
Chris,
it's silly.
Chris, by the way, I've been in a years-long battle with Jim Cramer and his pack of goons and short sellers. Right about when CNBC writes about something like that, that's like a week after all their boys already got short the thing. You know what I mean? And then they sell right into it even more on the way up, and then they cover. You know what I'm saying?
John, I got one name for you. Dan Dorfman, remember him?
Of course. You know what? I used to love Dorfman. I used to love him.
On at 12 o'clock, and he would he'd pump something up.
We
had his hand in that ahead of time.
We had the AM radio in the office. We all used to crowd around it. You know what I'm saying? All the Jewish guys in the office, I'm not kidding you, they all had the AM radios. They had it right to their ear, right when he would come on with the Dorfman Minute over there. It was amazing, right?
Yeah.
Chris, but let's say you are maybe not a day trader, but you're more a short-term investor. You're not looking to keep your money in the market for 6 months, 10 months, a year, 5 years. Where would you be putting your money now in terms of stocks or securities in general if you were looking to make some money investing in the short term?
I got to be honest with you. Based upon what you see on the day-to-day here and the various different narratives that are thrown out, it's very, very difficult judge. It's not something that I do. I've never been good at it. I mean, we can always play Monday morning quarterback and say, oh, you know what? I knew that was going to go up. I knew the market was going to do this at this point in time. I don't ever engage in anything like that, nor do I get my clients engaged in anything like that. I am a pure fundamental long-term investor. That's what works. It's more of I'm a boring, slow and steady wins the race type of a guy.
Yeah, Frankie, these day trading strategies, you know, people are talking about it. A lot of these people writing their own algorithms and stuff. It's no match for regular novice humans. It's no place for them. And by the way, I think like 85% of the volume in all markets is electronic these days. So when they're talking about huge, you're talking about a segment of the other 15% is day trading. So it's not.
You know, how many algorithmic traders got completely blown up over the first half of this year? I mean, absolutely decimated, you know, just crazy. Not to mention, you know, a lot of the leveraged funds out there. And again, this is another sad story. It's something that we were warning people about for years. People looking to play catch up. They weren't prudent enough through their entire lives. And hey, I don't care. I'm going to retire anyway. And looking to make up for lost time, they try to goose their returns in these triple leverage type funds, whether it be to the upside or to the downside. And they got absolutely destroyed, wiped out completely.
Without question.
Chris, I'm wondering. There's been a lot of attribution of the fear of a second wave to the stock market slide today. But what role does the chaos that we're seeing on a lot of our streets play in terms of the tumult in the stock market? We're seeing sections of Seattle being taken over by basically a terrorist organization, Antifa. We're seeing statues that have stood for 50, 75, 100 years being beheaded, being thrown in the ocean, being massacred by an angry mob. Do the fears of the angry mob play a role in what investors are doing?
I don't think so. I think that it's been worse, you know, over the past week and a half, and we've seen what the markets have done over that period of time. You're going to look to history as well and see how the markets performed in the late 1960s when we had riots in the streets. At that point in time, the markets kind of see their way through those things. What's taking place in Seattle is just a lack of leadership. I think the markets are taking a look and seeing that, you know what, the narrative moving forward is going to be second wave. And that's what the media wants. I mean, they want people at home glued to their television sets, scared out of their mind, thinking that they're going to die. And this is what's going to happen. I mean, we got an election coming up. We know where certain people's loyalties lie, especially when it comes to the media. And that's going to be the narrative going forward. Let's put it this way. Ted Cruz talked about it in his podcast. You know, they get some sort of additional shutdown, which I really don't think that that's going to happen. Or they push the idea that there's a major second wave that's out there and the markets don't recover. It's going to be very, very difficult for the president to win in November.
Well, Chris, thank you for those insights. Really appreciate it.